Another type of relief is called gift relief or holdover relief. So for gift relief, there are two situations. One is the outright lifetime gift and other is sale at undervalue, which constitute an element of gift. So in order to get this, the asset must be a qualifying asset. It is to be gifted by individual to other individual, trustee or a company, and the recipient must be in UK at the time of gift, and a claim is to be made. Claim is not automatic. So let's talk about the outright gift first. So if a gift is being made, an asset is being gifted to another party, the transferor is called donor and the receiver is called donee. So from donor's point of view, we have to compute normal capital gain, chargeable gain, using the market value as a sale proceed. So when we calculate market value minus cost, it will be a gain. But no tax is to be paid by donor. Rather, the gain is deferred. The gain is deferred. And from the donee's point of view, the donee has received that asset at the acquisition cost, which is equal to the market value. But we have to calculate the base cost, and base cost is the acquisition cost, which is the market value, minus the gain deferred. So this is the calculation of base cost. So tax is to be paid by donee, but both donor and donee must make a joint claim for relief, and the date is 4 years after the tax year. So for 1920, the claim must be made by 5th April 2024. So Mr. A purchased an asset at a cost of 65,000. He subsequently gifted this asset to his son when market value was 85,000, and his son sold it at a price of 1,50,000. An election was made for gift relief. So from the donor's point of view, first of all, let's calculate gain. So market value is sale proceed. So market value is 85,000. Its original cost was 65,000. So a gain of 20,000. So this is charge gain, and you'll get a gift relief on this. So from the donor's point of view, there is no gain, no loss. Now, from the donee's point of view, the deemed cost is the market value, and that is 85,000. Deduct gift relief from this 20,000. So the base cost is 65,000 to be used subsequently for the gain calculation. Now when donee sold that asset, then the disposal proceed is 1,50,000, and then deduct the base cost rather than the original cost, and the base cost is 65,000. So 85,000 is the chargeable gain on which donee has to pay tax at the appropriate rate. Following are the qualifying assets. Assets used in the trade of the donor, being a sole trader, if that asset is used by the sole trader, or asset is used by the donor's personal trading company. Similarly, unquoted shares being gifted of any trading company, quoted shares and securities of individual's personal trading company, in which the individual has 5% of the voting rights. No employment requirement is needed. Additional two conditions, but it's not relevant for TX exam, it is for ATX exam. Any asset where there is an immediate charge of to IHT, that is such as CLT, and agricultural property provided conditions of APR is available. Now, from the tax planning point of view is concerned, we know that the donee has to pay tax at the appropriate rate, and that appropriate rate depends on the availability of annual exemption, the entrepreneur relief or investors relief, the level of income, the basic band availability. So GR is optional. So if not claimed, but it is to be paid by donor. So we have to consider from the donor's point of view whether it will be advantageous to be paid by donor. For example, if donor is eligible for ER or IR, then it is beneficial to pay the tax. But if donor has AE available and donor has no other income, then it is also beneficial, because then basic rate is to be used. Now let's talk about the sale at undervalue. In case of sale at undervalue, there is an element of gift hidden in that. So for sale at undervalue, the relief is modified as follows. For example, any sale proceed above cost is chargeable immediately, and other gain is deferred as a gift relief. For example, the cost of the asset was, say, suppose 50,000. At the time of sale, its market value was 80,000, and sale was at undervalue, that is 60,000. Now, the market value is 80,000, but it is sold less than market value and above cost. So the difference between the cost and selling price, this is 10,000 gain. This is chargeable immediately. And total gain is this one, 30,000 total gain. So total gain is 30,000 minus gift relief. 10,000 is chargeable immediately. So the balancing figure is the gift relief. So gift relief is dependent upon that what price has been charged. If price has been charged, whether the price is more than or less than that. Mr. A purchased a warehouse at a cost of 20,000. He gave the warehouse to his son when the market value was 50,000, outright gift. He then sold the asset at a price of 95,000. Calculate held over gain and chargeable gain on subsequent disposal by his son, and calculate gain eligible for GR, gift relief, and the base cost, assuming his son paid 28,000 or 18,000. So in part B, we have assumed that a sale has been taken place. So let's solve part A first. Assume it's an outright gift. So if it's an outright gift, then first of all, from the donor's point of view, the market value is sale proceed, and it was 52,000. The original cost was 20,000. So the gain is 32,000. But as it's outright gift, so gift relief is available, 32,000 for donor, and for donee, market value becomes deemed cost, that is 52,000. Deduct gift relief of 32,000, and 20,000 is the base cost for donee. Now donee has subsequently disposed of at a price of 95,000. So sale proceed is 95,000. The sale proceed is 95,000 and the base cost is 20,000. So our chargeable gain is 75,000. So this is the case of, this is the situation A where it's outright gift. Now next situation where his son is paying this. So now that how much chargeable gain is there? So sale at under value. Situation B, and that is sale at under value. First situation where selling price is 28,000. Now as cost is 20,000 and selling price is 28,000. So first of all, find out the excess over cost. So selling price is 28,000 and cost is 20,000. Is there excess? Yes, there is an excess of 8,000 and this excess is chargeable immediately. Now the donee has received this at market value, so it's 52,000 and we have to identify the value of gift relief. So let's do it in such a way that 8,000 is the gain, and from donor's point of view its market value was 52,000 and cost was 20,000. So the gain was 32,000. Now from this gain the chargeable element is 8,000. So that means the element of gift relief is a balancing figure, that is 24,000. So 8,000 is taxable immediately, and for his son the base cost will be, now the base cost will be market value, that is 52,000 minus gift relief, that is 24,000, and in this way the base cost is 28,000. Now on subsequent disposal the base cost is to be compared with selling price. Now scenario 2 where sale proceed is 18,000. Now in this situation, as cost is less than that, so it means that there will be no chargeable gain immediately because cost is 20,000. So no chargeable gain for donor immediately. Though it's optional, donor can pay tax, but it's a normal situation now. For donor, there is no tax. For donee, the calculation is like market value 52,000, gift relief 32,000, full amount, and 20,000 is the base cost. So this base cost is to be compared for subsequent calculation.